guys, happy Friday. Hope you're having an amazing Valentine's Day, and because of that you should go and show some love to my channel and this video by subscribing and smashing the like button for the YouTube algorithm. You can also go and follow me on my Instagram. In today's video I will talk about Uber as a stock and as a company, what my thoughts are, how they've been doing lately, and at the end I will show you my portfolio to know when did I buy this stock and at what price. All the links I will be showing in this video will be linked down below in the description. As all of you may know, Uber is a platform that connects drivers with people or restaurants. The app shows you who the driver is and you are charged automatically. They are active right now in 85 countries as Uber, but they have some major ownerships on other similar companies in other countries such as China, Russia, and Southeast Asia. In each case, Uber decided to leave the market, but upon doing so, take a stake of its rival business in exchange for the assets it had remaining. That not only keeps them involved, but it removes the often substantial cost of competing with a single market player and gives Uber options to re-enter the market or profit from its partner's success there. Already that strategy is bearing fruit. Today, those holdings are collectively worth a cool $12.5 billion on paper, with at least $3 billion in gains so far. That was back in April 2019. Right now, they own 15.4% of Didi, which was the Uber competitor in China, 36.6% of Yandex, which is the rideshare company in Russia, and 27.5% in Grab, which is located in Southeast Asia. So this means that it's not just Uber expanding their businesses, but they have major ownership in other countries. Not to mention that Uber was and is the #1 player in the world with a ride-sharing concept for people that don't or can't have a car or just don't want to drive or pay for gas. They only have one main competitor, which is a very good since that normally leads to a big profit, since they won't need to keep fighting and spending a lot of money to compete with these companies. They are still competing with other delivery companies, but they are going to be #1 or #2 player in food delivery industry around the world, since here in the US and the EU is already a big thing. They are not only Uber and Uber Eats, they offer other services such as the Uber Freight, which is a game changer because they are giving more control to the drivers, since they are able to choose where they want to drive and when, giving them more driving time, and as a trucker, time is money. Uber is offering a cheap pricing by charging only 1% in comparison to the 15 or 30% that is normally charged in the industry per transaction, and that means more money to the trucker and more money to the shipper's pocket. For 2023, they are planning to have their aerial rideshare. They are planning to give riders the option of an affordable shared flight. Uber is working closely with federal and locally policymakers to develop an area offering that's safe, quiet, and environmentally cautious, and that extends the reach of existing transportation options. When you think about traffic congestion, the only way of beating it is flying. And come on, not all of us can afford a helicopter, so they are offering this service that will be very helpful, in my opinion, in cities like here in Miami or Los Angeles, where you can be stuck in traffic for more than 2 hours daily. They also bring this new service, which is self-driving vehicles, to the Uber network around the world, starting with cities here in the US and Canada. And if you think about it, this is one of the things that will make Uber more profitable, since the robotaxi network is the future. The new strategy is designed to help Uber drive down costs as it seeks to show investors it has a clear path to profitability. Now, let's talk about Uber's valuation and their financials. Uber Technology has a market cap of $66.31 billion at the moment. We have to take into consideration that before going public, people were talking about Uber having a valuation of $120 billion. While Toyota recently invested about $500 million in the company at a valuation of $66 billion, bankers have indicated that the company could be valued at as much as $120 billion. They ended up going public with a valuation of $70 billion in their IPO, and just after going public it started going down because they started facing some regulations, as normally happens with technology companies. For example, in November was a bad month for Uber. London declined to renew its license. Seattle approved new fees on rides and a to be determined minimum wage for drivers. Chicago passed a congestion tax on ride-hail services that adds as much as $3 to private rides during peak hours. New Jersey hit the company with a $640 million bill for misclassifying drivers as independent contractors. We can see that the revenue has been increasing a lot year over year, and if we compare their fourth quarter of 2019 with 2018, it almost doubled its revenue in the last quarter. They weren't profitable at all, but Uber CEO looks to put 50 cents of every dollar of revenue growth into achieving profitability. And you may be asking, okay, how are they going to get profitable? Well, they started, as I mentioned before, by exiting markets where they couldn't be number one or number two player, like they did in Russia, China, and Southeast Asia. And also, they sold its food delivery business in India to their competitor Zomato. Another way of getting to profitability is by increasing their rates on their rides. And come on, people are still using Uber because the rates of a normal taxi, of a regular taxi, is way more expensive than Uber either way. And talking about growth, they reported that their monthly active platform consumers increased 111 million people. That's a 22% growth from 2018. Their trips increased 28%. Their rides adjusted EBITDA increased to 281%. That's crazy because what it means is that their rides are getting profitable and their adjusted EBITDA increased also 25%. All these numbers that I just mentioned are comparing it with the last quarter of 2018. Now, in yearly basis, their trips increased 32%, their rides adjusted EBITDA 34%, and adjusted EBITDA decreased 48%. The growth in their services, comparing it with the fourth quarter of 2018, the rides increased 27%, Uber Eats 68%, and Uber Freight 75%. Uber Freight, in my opinion, is still a small business that is increasing really fast, and also their other bets increased 189%. That is why, in my opinion, they don't mind losing a little money for some years, maybe 1 or 2 years more in Uber Eats and Uber Freight, because they are growing like crazy. And when they get the competitive advantage in these two businesses that they have with Uber rides, and they overpass the delivery companies, oh boy, that's gonna be a very good company and growing company. Their growth internationally has been increasing as well. Comparing it with the fourth quarter of 2018, in the United States and Canada, it increased 41%, in Latin America 31%, in Europe, Middle East, and Africa 27%, and in Asia Pacific 34%. In 2019, they were the most downloaded app in both rideshare and food delivery, and also on both Apple and Google Play. And that is something that is good to see as an investor, because if someone else would have beat them in these numbers, I would really get preoccupied. If they as a company continue to show this progress quarter after quarter, then people will start seeing these numbers and start thinking that they will actually get profitable, and Wall Street will start getting more faith in the company as well. I started buying this stock because there was so much negativity at the moment that people, in my opinion, was thinking only short-term moves. But I was thinking about 3 to 5 years from now, from when I bought. I have faith that this company will grow a lot in the future if they continue going as they are going right now, and if they continue evolving. Come on, they have the competitive advantage in their businesses. When you want to go out and you don't want to drive, you go directly to the Uber apps. Or when you want to ask for delivery food, you also use their Uber Eats app. That's why Papa John's already got connected with these apps, because they know that everyone nowadays, when they want to eat something, they just go and check Uber Eats app to know what's available nearby and buy it, instead of having to call a lot of different restaurants or download different apps and decide what to eat. Now let me show you my portfolio. As you can see, I started buying this stock back in November 6th of 2019 at a price of $26.12. So that gets me to gain at the moment 51.82%. That's 2.15% of my portfolio. I regret I didn't buy more shares at the moment, or even in December or January, but I will keep buying as long as the stock is below $40. But not as aggressive as I did on November, because obviously I'm already 51% up. That was all for today's video. I hope you enjoy it. Again, happy Valentine's Day. Give some love to my channel and my video. Go and subscribe and smash the like button for the YouTube algorithm. And also go and follow me on my Instagram. Thank you and see you next time.